What's up? What's going on? How's everybody doing this morning? And of course, this is just the pregame going into our presentation. But no, markets are they continue to decline. Okay, they continue to go higher. Even with last week's, what felt like it was kind of heavy. If you look at the longer term chart, okay, I mean here's the Nasdaq, okay, a little bit lower, but the Russell was higher, the Dow was much higher, and the S&P was higher. So again, when you look at the chart, you look at what's going on, the markets still want to go higher. I know many of you don't believe that they should be going higher. I may be one of them, but what do we know for sure? Okay. What is the one thing we know for a fact? Okay. That the market is always right, is correct. Okay. So again, it's not for us to tell the market what to do. We have to follow what the market is telling us. And right now the market says it wants to go higher. I mean, if I look at the overall picture, I mean, the euro currency still wants to go up, a little bit of a pullback down to support. Bitcoin still wants to go higher, a little pullback to support. Bonds, they're kind of in the middle, either way, and the notes are the opposite. They're both in the middle, although we'd be long bonds. We're long notes and short bonds right now. I mean, again, do I know which way? No, I think both of them are going much lower, even though I'm long one of them, because I think that the Fed's going to continue to hike, and of course, those are directly correlated to the interest rate market. Okay. And by the way, those that are new, just tuning in, this is just a pregame. I haven't started anything yet. This is just me hanging out, okay, and trying to educate you on other things, when we're not, talking specifics. But anyways, gold, it looks like it's getting ready. Again, I think gold is going much higher. I think that we're short right now, but I think it's going much higher. I think it's going to make new highs this year. We'll see. Overall, the pattern doesn't look so bad. The silver, pretty good. Again, you just have to relate. And we're looking at long-term charts now. Okay. They're different than looking at, the dailies or whatever, right? If you change the time frame, it may or may not change the picture. Okay. And what you're trying to assess is, anytime you trade, you got risk. Okay. That we know for sure. Anytime we trade, we have some risk. Okay. So if we're taking risk, how are we going to go about that? And what are we going to use to take risks? And obviously today we're going to talk about options, but it is, how can I spread out my risk? How can I allow for opportunity? How can I allow for time to get myself there? Okay. So these are all the things that you consider when you're trading. But again, as we scroll down, the boards, I mean, again, you look at different products, you get an idea of what you think. And of course, I think copper is going lower, although we happen to be long it. Now, again, my opinion and the actual market are not always the state. They're not always in togetherness. Okay. But again, I don't trade my opinion. Okay. I try to trade what the market is telling me, what the market is bringing to me, because again, if you learned to understand the function of the market, if you learn to understand how everything works, okay, then you make yourself a much better trader. You make yourself a much better investor. You make yourself much less emotional around times of stress, because I know that when it comes to money, is there anybody here who's never felt stress when it comes to money? I didn't think so. Okay. So again, it's how do you, depending on whatever you're watching, how do you prepare yourself to basically take your emotion out of the game? Okay. Remember, we're trying to take our emotion out of the game. We're trying to keep ourselves in the best position so that we have the greatest opportunity for success. Does that make sense? Okay. All we're trying to do is give ourselves the greatest opportunity to have successful trades. Okay. So again, it's how do we get the emotion out? You know, you look here. I mean, this would make you kind of queasy. But I look at this chart, and I go, that was a pretty heavy sell-off on pretty light volume. And if we know from history, typically sell-offs are on heavy volume. So what does that say to me? It says, well, it was probably more of a respite for the market there than it was an actual dramatic sell-off. Okay. So again, those are things that we are constantly looking at when we look at the market. Again, we have to assess every market and our understanding of that market. Okay. And if I look at, if I look at the natural gas market is going sideways. Okay. It looks like it wants to break out. I mean, certainly if you go back and mimic this pattern here, okay, you're seeing similar right here. You're seeing it similar right here. So you're seeing similar, and each time it has done what? It has ended up going in the direction of higher. Okay. Do you have a rule of cash reserves per natural gas contract? It depends if you're trading the big one or the little one. Okay. But basically, I want to have 4 to 5 times the margin that is required to carry that position. Okay. And are you going to carry it overnight? Are you just going to trade it? There's a lot of questions to be answered. Okay. To that. Hold it. You need to have 4 to 5 times the margin required to carry it. Okay. And remember, it's a very dangerous product. Okay. Because again, as I've shown you on Monday, right? The formation with what they call backwardation and contango. Okay. With backwardation and contango, you can already see that if you go out in time, it's already priced out at higher dollars. Okay. It's already in the mid 3s as you go towards the end of the year. Okay. Here we're in the mid 2s, but it's in the mid 3s. Just remember that again, it's not the easiest of all products to trade. It is like they do call it sometimes the widowmaker. Anyways, anybody just tuning in, this is just a pregame. I have not started anything yet. I'm just teaching. I like to do some extra teaching. Okay, crude oil. I put in the chat room the other day that I expected crude oil to go to 82. Okay, and I think, and I posted it right here. Okay, on Thursday. Okay, so again, it'll have some pullbacks. I'm sure it's at prime resistance, and it'll probably pull back a little bit. But I do think that you're going to see a push higher. Okay. Again, this is if you believe that the economy is in good shape, good. I don't believe it's in good shape. I think the economy is in horrible shape. Okay, that's my opinion. All right, between falling home sales, between rising interest rates, between the inversion of the yield curve, I think we got troubles. Okay, not to mention, there's massive amounts of evictions going on right now. It isn't enough that we already have enough homeless people. We got to have more. Okay, because of the great Bidenomics. But anyways, either way, it doesn't matter, right? See, because at the end of the day, what do we care about? Okay, we care about results. At the end of the day, we care about money. Okay, that's what it comes down to. Life comes down to 2 things. One is always money. Okay? So we care about money. Okay, and we care about being within the market, knowing that we're not going to make money in every trade, but knowing that we should be able to get through and get through any tough times. I've been doing this for 44 years. So, I've been through the highs and the lows of trading. And I think I'm a pretty good teacher as well now, because, I was kind of forced to, because I had to come off the trading floor. Okay. But when we look at markets, you have to look at them with a very open mind. Okay. I know everybody's saying the S&P's got to go down. Well, why? You tell me why it's got to go down. Is there anything in this pattern that says that it should go down? Okay. You tell me. Okay. Anybody see any reason why I should think this is going to go lower? from here, other than your opinion? Okay, so again, we have to be objective. In life, you have to be objective. You have to have compromise. If you have any friends or a spouse or a significant other, you have to be willing to compromise. So you also have to be willing to compromise what you think you might know about a market. Okay, because you don't know. I don't know. And again, I got some pretty significant experience, but I don't know what's going to be next. Could I tell you, we live day trade futures every day. Can I tell you for 10 minutes? Yeah, I give you a pretty good shot. Okay. But can I tell you for the next 6 months? No. I know what I think, but that doesn't mean what I think is the way I'm going to trade. And there's a lot of factors in the market that give you hints or clues as to how to trade and what to do. So you got to forget about all of the news that you hear, good or bad, okay? Because number one, the markets already know what the news is, okay? The markets have most likely priced it in. Now, the only thing that can change, for example, Wednesday is a Federal Reserve Day, right? They're going to have an announcement on interest rates on Wednesday, okay? So does anybody know what they're expecting, or does anybody think about what they're expecting for interest rates? Anybody got a clue or an idea? 25 basis points? Okay. So you know that they're expecting 25 basis points. The federal funds rate at the Merck says that they're expecting 25 basis points. So what is the market's expecting? 25 basis points. Okay. So we've already priced into equities what the market is expecting. Okay. So what would be the effect, the adverse effects or the positive effects to these markets? Okay. If we saw something, so if they don't increase, what does that do to markets? Any opinion? And again, those who are new, this is just a pregame. I will start at the top of the hour as always. Okay. This is just me having some fun and hanging out with you. And if you want this pregame, you have to email me. I send out the regular recording from the regular call, but I do not send out the pregame unless you request it. And you can just request it at bob@bubbatrading.com. Okay. But at the end of the day, okay, if they do nothing, so will the markets react positively if they do nothing, thinking that, oh, well, interest rates are coming down again, or they're not going to go up, so it's the green light to buy? Or would they create some fear, okay, that they didn't feel the need to raise? But we would assume that you are correct. Okay, you're a good teacher because you are drawn to it. It is one of your talents. Some people want to teach but just can't pull it off. Well, it's a gift I actually got lucky with to learn that I had it. When my son was playing baseball, when he's a baby, when he made the first travel team, they asked me to be an assistant coach, and I said no. And they begged me, and I finally decided to do it, and I ended up loving it. I became a very good baseball coach for kids, and actually coached those kids until they were 18, and won more championships with them anyway. And then I ended up getting into this because there's no more trading floor. But anyways, I do like teaching because I work hard at it, and I keep trying to learn, which I think is important as well. Okay. I know there's always something new to learn. So anyways, if they hike at 50 basis points, well, that would probably crush the market, right? So, if at 25, that's right in expectations, the markets will just continue their natural flow. Your wife says, well, my wife, I don't know what my wife says, but I've never been able to teach her anything. But again, so we can't be those who are trying to decide what the market's going to do. We have to let the market decide, and we have to follow. So if I'm looking right now, for example, at this chart, my expectation is that this is at resistance for the moment. The trend is definitely higher. I would expect a pullback, and I would look for a pullback probably to, maybe 4,500, maybe, but this could be the support right where it's at right now. Okay. We could be at support right now. Okay. So I don't have to, I got to get rid of this. I got this. I was trying something different here. Here, get rid of that magnet. This could be support right here. Okay. And we could bounce from here. Now, but right now, my expectation is that we go sideways or pull back a little bit. Okay. But not dramatically, not the market's coming to an end, but a normal pullback. I mean, again, I showed you an earlier chart here. Look at this pattern right here, and then look at the same pattern right here. Okay. So what do you got? You got a little bit too fast up, a little bit of a pullback to another charge. Okay. So remember, when you look at that, those are things that you're seeing. Okay. And these don't let your eyes deceive you. Don't let your opinion get in the way. Okay. You have to learn to be, here's what the chart's telling me. This is what I see. This is what the trade I'm going to use to get there. And this is the defensive mechanism I'm going to use to protect myself if I'm wrong. Okay. And that's what you have to worry about making sense with. Those are the things that you have to do on a regular basis. Okay. And it behooves you, because trust me, listen, I only teach you from the sweat off my own back. Okay. What do you think? Every day was a holiday for me? Every day was Christmas? I had plenty of bad days. I had plenty of rough times. Okay. And I see some more just tuning in. This is just a pregame. We have not started anything yet. Okay. This is just me hanging out, teaching. Again, I like to take every opportunity I can to help educate people. I'm very fortunate. I've had a very good life, and I want to try to pass on as much knowledge as I can. How you feeling, senior? How's the back? Are you ready for a game? I'm waiting. Anyways, so again, we look at the markets, and the markets are basically tell their own story. Okay. Now sometimes there's some interesting twists in the market. Okay. But if I'm looking at the NASDAQ, okay. Now, for example, going into the weekend, I sold call spreads in the S&P. I sold put spreads in the NASDAQ. Why? Because one's at resistance and one's at support. Oh, to rehab, 2 weeks for rehab? How you feeling overall? Better? I'm looking forward to seeing you. Even if you can't play golf, come out anyways. Good. Come out and see me anyway. Either way. If I got to carry you around the golf course, I'll carry you around. Come on and hang out with me. Sorry, we'll have some fun. Anyway, so again, the markets are telling a story. Okay. The charts tell a story. Okay. It doesn't always have the right ending, for what your position is, but that's where the defense and the other mechanisms come into play. And that's where the options, which we'll get into, later in a little bit, come into play. Okay. And again, just a reminder for those just tuning in, this is nothing but a pregame. I haven't started anything yet. I got a big mouth. I like to talk and I like to teach. So I'm here early as always. And every call I do, if I call it for noon, you can bet that I started at 11:30. But I'll get into the real stuff in a while. But I have to look, and again, you can look at any stock you want. It doesn't matter, right? You look at Tesla, just had a massive sell-off. Okay, well, it failed. It failed where it should have failed from if it was going to fail. Okay, now again, just dramatically, I don't know. I mean, I could look at this and say, well, this might hold right here, or it might come down to this level here. But it is telling a story. Certainly, if it's going to continue being a positive stock, the lowest it better come down to is about 235. Okay. Or it could get really dangerous. But right here, this is, you can never account for markets when they overextend in one direction or the other, and how far they will retrace back to the mean. Okay. That's one thing that you're always watching, is what is the potential the trace to the mean, how far it will come back down or go back up, depending on which direction they're going. We don't know that exactly, but again, once again, the markets will leave signals. It's funny. I trade every morning live futures. Okay, and we're using here. I'm showing you a daily. Here I'm showing you 4 minutes. Okay, and in dailies, when we're trading actively, we use 4 minutes and 1 minute. Okay, which create the same exact patterns as you see on the daily. But we can get an idea of the footprint much faster because we're making decisions much faster So if you're making decisions faster and you're making trades faster, what's on the other side of that equation? What would be your guess? If you're trading shorter term, you're typically taking less risk because you're getting in and out of trades faster. Okay. So again, it's the longer the time frame that you're going to trade off of, the more risk you have to be willing to take. Now, again, it doesn't matter. Risk is a question to each individual. Okay. That is up to you at how much risk you want to take, which would be defined by the time frame, but you still must always define the amount of risk you are willing to take. Okay. And what makes sense to the size of account that you are trading with. Okay. Very important that you keep your overall risk reward in place versus the amount of capital that you're trading with. Anybody can get lucky and make a score, but more often than not, people tend to panic out long before. So going back to the original premise here, we can't worry about what the news is. We can't worry about what we think about the economy. The answer is right here. This is telling you where the money is flowing. Believe it or not, that's where the money is flowing. Doesn't matter that housing is breaking down. It doesn't matter there's more evictions than ever. It doesn't matter that corporate debt has failed, that we've had more corporate failures this year than all of last year. None of it matters. Okay, that's the key. But you have to remember that you have a lot of reasons to be bearish, but why fight the market? Okay, and just again, there's a lot of, obviously we're getting a bigger rush coming in. If you're just tuning in, I haven't started yet. This is just me. This is just a pregame. And if you want the pregame recording, I don't send that out. I do send the regular recording out. But if you want the pregame, email me and I will send it to you. Okay, at bob@bubbatrading.com. But in the meantime, again, markets themselves are telling their own story, and each stock will tell its own story as well. Pick any stock at random here in NVIDIA. What's the story it's telling? Well, it wants to go higher. Yeah, a little bit of a pullback, but overall, just look at it. If you picture yourself on a treadmill, are you walking uphill here or are you walking downhill? Okay. So again, you want to use as many tools as you can as you look at the market. Okay. And you look at the chart, because the footprint will put you and guide you into the best possible opportunity. It does not guarantee you anything, but it gives you the highest probability of success. Okay. And at the end of the day, all you can really ask for is to put yourself in the highest position of success. Okay. It's like if you're a poker player, it's like playing pocket aces. Well, you got the best of it going in. You may not win, but you can't be any worse than a 4-1 favorite going in. Okay. So again, you take those odds every time, you're going to be a winner. But it's also recognizing the discipline that it takes to take the loss when you have to take them as well. Okay. Again, remember that at the end of the day, we can only control what we can control, which is our capital that we're using, our risk that we're taking, and the ability to make the best use of it. Okay. So don't put yourself in jeopardy where you don't belong. And I see more new people come in. This is just the pregame. We will start at noon sharp. Okay. I will stop this recording and we will start at noon. Okay. So don't worry. You didn't miss nothing. Again, I'm just here kind of hanging out and doing my thing. But so when you look to find an idea of what the market says. You look at the dollar. Well, you would expect, okay, after a dramatic sell-off, is this anything that you didn't expect to happen? Okay. Markets, remember, everybody gets caught up in the fact that they think markets go straight down or they go straight up. Do you realize there's a lot of action in between there? Okay. That there's a lot of stuff that happens in between the ups and the downs. And more often than not, the markets are more steady and in consolidation or slightly rising or slightly falling. when the faster they rise or the faster they fall, the more the higher the probability they will have a mean retracement. They will come back to the mean, either up or down, depending on which way they're going. Okay, does that make sense? Are there any quick questions before I get ready to start? This is the pregame. Anything I covered in the pregame? Anybody have any quick questions? Because you know me, I could talk forever. I can trade forever and talk forever. And when they find me, if I make it, I'll be laying on the top of a keyboard someday. Okay. All right. So, like I said, at the end of the day, the market is about the footprint. The market is about understanding the other things that have an effect. Well, what affects the futures market? What affects the equity market? What affects the options market? Okay. Because different markets create different effects. And understanding where not only you can trade, but where you can get the best value for your trading dollar. That is what is more important, is where can you make your trading dollar go the furthest? Okay. That is the thing that we want to make sure that we get the most of. Where can I make my trading dollar go the furthest? And if I can figure that out, then I'm on the road to success. I'm on the road to making money. Not every day, not every trade. Okay, that is not the way this business works. They're not, unfortunately, that other than all the crappy advertising you read, that everybody's got 99% winners. Okay, that would be false. Okay, this is a hard business that takes work and focus and concentration to get there. Okay, it doesn't take a lot of time every week, but it takes the discipline to do the right things. Otherwise, you put yourself in a bad position. Okay, so again, remember, just take from this, you want to try to figure out which way the market is telling you that it's going, and it's going to go that way until it finds a reason to go the other way. Okay, but know that when you get extremes in either direction, okay, when you get extreme moves in either direction, their higher probability is a mean retracement. Okay, and again, if you don't know what the mean is, okay, if you've ever used, now I don't use indicators as a rule, but the Bollinger Bands are something I share with and I teach off of occasionally, because this will help you understand the mathematical equation of where is the mean, where are we overbought, and where are we oversold. Okay, so if I look at the dollar here, that's a good one to look at, right? And it was going into yesterday or going into earlier this week, it was oversold. So naturally, we would expect the bounce, and the trend doesn't have to change, even with a bounce back to where is now currently the mean. Okay, and those who just tuned in, I didn't start yet. This is just a pregame. I'm going to shut this down in 3 minutes and get started with the regular call. What's up, brother? But again, you have to make the assumption. It doesn't mean you have to act or trade on it. But if you have a current position, if you happen to have been short dollars down here, you might have wanted to look to do something for some protection against that short position, assuming a potential bounce. Okay, now, one thing you'll understand about these indicators, this is a math-based indicator, okay, where the trend will dictate which way the mean is going and also which way the overbought and oversold going. And of course, the more action, the more volatility, the wider it becomes. But this is not about Bollinger Bands. This was just to show you a specific example of whether we're overbought or oversold and why. And it's certainly crude oil is just about getting ready to get overbought. I just made a call that I thought it was going to 82. I still believe that's where it's going, but I wouldn't be surprised that if it did get to 78, that it does pull back for a couple of days. Again, remember, the markets will back and fill. They'll do all kinds of things because they're designed to create the most amount of confusion for everybody. Okay. So again, we'll get started in 2 minutes with the regular call. And again, if you have any questions for this stuff, you got 2 minutes to get into me. Otherwise, we'll just keep looking. And again, I'll look at some of the other markets around. I mean, I think the grain markets are getting ready to pop pretty big. I think that actually, this action was pretty bullish actually. After that street, again, here you go, straight up from the bottom, a little bit of pullback right now on the mean. And to me, that would be fairly bullish for corn. Okay, I think that their grains are going higher. I think that's what I would expect. But again, I could be wrong. Again, we're long, and I'm long. I was long before. I bought them, earlier. I was willing to hold them and buy them. But again, remember, it's about good judgment, good decision making, and about patience. All right, let me stop this recording and we'll get started with the main show right after this. Hold on, let me stop. Yes. Okay. All righty. All right, we'll get ready to get rock and roll here right now. And wait for high noon. Everybody gets yelled at me when I start early, so I don't want to make everybody mad at me. I have I'm very sensitive. I have very sensitive feelings. All right. It is just about that time as I watch my watch. Okay, it is high noon. What's up, everybody? Welcome aboard. Welcome to Trading Options with Bubba, or the ins and outs of options. Basically, I'm going to give you as much information today as I can give you in a short period of time. Options markets are interesting. There's a lot of ins and outs to them. There's a lot of things that you need to know, and I'm going to try to give you the best I can to give you what you need to know now to make sure that whether you become a member with me or not, you are prepared to move on. Again, I'm a big fan of education, not school education, on trade education in whatever you're going to do. Learn how to do it and do it best. Okay, and I want you to be able to do it best. I want you to be able to defend yourself as the best you can. Again, you become a member, you get me all the time. You get education every day. You're not, I want you to at least learn, because I want you all to protect yourselves. I think it's important. I'm on your side, and I want people to do very well. That is always my thing. I've been very fortunate. So let us begin. And of course, this is being brought to you by my good friends at Target Trading. Okay, just want to give them a shout out, because they're like I am. Okay, straight up, right? They tell it like it is. They don't bullshit anybody. Excuse me, that offends you. They're like I am. They just want you to be successful. They want you to be happy. They want you to learn. Okay. So thank you, Target Trading, for putting this together. I appreciate it. You guys are solid, my buddies. In the meantime, always watch your daily summaries. Greetings from Bulgaria. And great to see you. Thank you. Too many people spend money they don't have to buy things they don't want to impress people they don't like. Anybody do that here? And why would you do that? Okay. Again, make your money work for you. Don't piss it away. And many of you follow all this garbage out there. I will promise you one thing. There is no get rich quick. Okay. You may get promised it, but you can get poor quick. You ain't getting rich quick. Okay. So don't put yourself in that position, because at the end of the day, here I am talking to you straight. I'm telling you that it ain't going to happen. Okay. And if you're here because you think you're gonna get rich quick, you're at the wrong place. Okay. The disclaimer is, again, obviously options and futures have risk and past results, which I don't show them anyway, so it doesn't really matter. But past results are not indicative of the future. Okay. And that's why I don't really care about the past results, because the past results don't matter. What matters is today. Okay. What matters is your future. Whatever happened in the past happened. Okay. Can you fix it? Or do you want to fix it? That's what you're worried about. Okay. In the meantime, for those who don't know me, I am Todd Bubba Horwitz. I have been doing this for, not this part, but I've been trading for 44 years. Okay. I was a floor member. I started at the CBOE, Chicago Board of Options Exchange, in 1980. Became a member of the Mercantile Exchange as well, and also the Board of Trade, and actually still currently hold a membership to the Board of Trade. I was one of the original market makers in the SPX. That was, I think, 81 or 82, I don't remember, but that's how markets get started, by the way. You have to have market makers that are willing to go in there and create liquidity. Okay. So that the market can start. And look what happened to that pit now. And just the one thing that I do, every recommendation I make, I trade. Okay. If I ain't trading, then I ain't giving it. Okay. That's pretty much how I am. All right. And one thing I want you to know is that part of our training if you become a member, is every Saturday at 9 a.m. Eastern time, I do a call. I did one this morning. Education, new trades, the whole kit and caboodle. Every Saturday morning, and anything you cannot make is recorded, just like this call is going to be recorded right now. Okay, so you're always, again, we're always educating, because I'm trying to learn something new every single day myself. So I want everybody else to learn as well, and that's something that we try to do, is we are constantly trying to educate. Okay. Somebody sent in a question, which I'm just going to share with you. I've seen you and enjoyed your market analysis on Kitco News and Stansberry Research many times, but I've never used your service so far. I'm curious about your weekly options call. I was wondering, at what time does it take place and for how long? It takes place every Saturday at 9 a.m. Eastern time. Okay. It is also recorded. Also on Live Futures Day Trading Hour, I had the same question. I wonder if I can do trades on the side during my day-to-day home office job. Does it require full concentration? Okay. The answer is simple. The options that we trade they require probably 10 or 15 minutes a day, if that much. Okay. The futures take, I trade for an hour. So that's up to you, but I call the trades. But certainly everything takes time to learn. Okay. But you don't have to learn it at that time. You can learn it on the recording later, because everything I say and do is recorded. Everything is sent to you. You have access to everything. So again, but you don't have to worry about this interfering with your job. I have a lot of guys and gals that trade from work. Okay. When we're doing live trade. So anyways, I think the big thing to understand in markets, in trading and investing, okay, there's one common denominator. There's always going to be some drawdown somewhere. Okay. It doesn't rain forever. Okay. There's going to be a drawdown. Okay. And, again, we've seen it. You've witnessed it. You've watched it. Okay. The real question is can you deal with it? Now, most cannot. Okay. Depending on how steep the drawdown is. But most investors that have their life savings in something obviously panic all the time. And naturally, the typical panic comes at the worst possible time. Because actually, if you've heard me talk before about my favorite movie, It's a Wonderful Life, Mr. Potter isn't selling, Mr. Potter is buying. And you want to be a buyer at those levels. You want to learn how to use those markets and those drawdowns to your advantage. But be aware that the drawdowns, like markets, don't announce themselves. They happen. You go into a little bit of a losing streak. It is how you handle it. And if you're taking care of and accounted for all the risk that you have, which we always do. See, we always know exactly the amount of risk we're taking. So what are options? If you don't know what they are, options are a derivative product, which means they're derived from something else. Okay. If you're an option buyer, you are buying the rights to do something. If you're an option seller, you're an insurance man, you are selling at a premium. Okay. So if you sell, you've got risk because you might have to deliver, and you don't know how much the risk is if you just sell naked. If you're a buyer, you have to pay a premium. And the real key here is how much premium can you pay? Okay, this is the thing that one of the points we're going to get into later, but keep that in your mind, right? How much premium can you pay? Option buyers are charged a premium called the right? Should market prices be unfavorable for the option holders, they will let the options expire worthless. Okay, they get abandoned if they get worthless, if you don't get out of them. Okay, now again, I don't like that. We don't do any real naked options here. We do options positions that account for every possible aspect of the market. Okay. But this is the basic of options, okay, which are derivatives. And derivatives are, there's derivatives in the futures market, there's derivatives in the option market, there's derivatives to bonds, there's derivatives to all different products. Okay. And if you remember the Big Short, okay, that was derivatives on derivatives. Okay. Which is what really caused the problem, was the over amount of leverage that the option sellers were taking, thinking that there was never any risk. AIG was selling those options like they were popcorn because they thought they were getting free money. Like what happened could not happen. We can't account for that. We would never put ourselves in that position. And I've had too many people over the years, if you've ever heard the name optionsellers.com, that went broke and busted out. A lot of people I know, as I warned them, they should not be with them because this is what's going to happen. and of course, unfortunately, I was correct. But again, you have to make sure that you're in a defensive mode all the time, protecting yourself against risk, which is why we have a trading plan. Okay, we build a plan, and the plan is in general to you, and then specifically to you. There's a general trading plan which includes your goals, your risk, the strategy we're using, the management, but also if I'm trading with $1 million and you're trading with $1,000, well, it's the same plan, but just different risk parameters, right? So remember, it's about risk. Okay, we're always constantly defending against dollars, right? Dollars are the key because it takes money to trade, money to operate. So we have to have a plan and understand how we're going to get there. Okay. Now, you've all heard how easy trading is. Trading is hard. Okay. I've done it my whole life. I've traded since I was 21 years old. Well, I'm 66. Okay. And there's not a single profitable trader that will claim that trading is easy. Trust me, it's work. Okay. Because again, the mental beatdowns you take occasionally. Okay. And this market seems like I do better selling options. Well, I mean, again, you know what? I don't want to answer a lot of questions, but I will answer this one right now. It works great until it doesn't. And when it doesn't, all the money you made getting up to it, you give it back. There's better ways to sell, which we'll talk about later. Okay. Listen, this is a competitive business. You remember, you and I, we're all together here, friendly competitors. Okay. We're trading for the same bid offer spreads. We're trading against each other in theory. Okay. There's so many aspects to trading that change the dynamics. Okay. In the equity markets, earnings calls, news items, the secretary, the scandals and all those things. In futures, what happens with the crop, the weather, and options. Well, they can account for that in options, and that is through implied volatility, which is something that is extremely important. It's probably one of the most important things about options. But many of you know what are many of the basic strategies of the option market: covered calls, married puts, bull call spread, bear put spread, long straddle, long strangle, iron condor. Now, on this list, there are two things on this list that I would ever even consider doing, and they would only be under certain circumstances. Does anyone know what those two things are that I would even consider on this list? Anybody got a guess? Got to be a little interactive. Got to have a little fun with you guys. Iron condors and straddles, I guess. Well, you're half right. You got part of it right. Cover call, never, not in your lifetime. Okay. The answer is I apologize. There's only one, iron condor. You got it right. Okay. And that is only in conjunction in our hedging program. Other than that, there's not a strategy on here by itself that's worth a shit. Okay. Not one of these strategies is worth diddly by themselves. Okay. If they're used in conjunction with others, then they have value. But the worst of them on the whole board is the covered call. And then the married put. Those are the two worst. Okay. Followed by the long strangle and long straddle. Why? Because those are all either they're profit stoppers or they're premium eaters. They either take your money away because you give up the profit from a big move in your favor, or you get sucked out of the premium that you have to pay for the options. Okay. And these are the things that people don't understand. These are the things I want you to learn today. Okay. I don't have calendar on there, but yeah, I trade calendars all the time. Okay. The business is about making decisions. Okay. We have to be able to make a decision based on what? Well, we have to base it on what is the market telling us? Which way is it going? What is the chart telling us? What is the implied volatility? What is the best strategy that I can put on to give myself the highest probability of opportunity? That's what we're about. We want the highest probability. There is no guarantee. I mean, I played poker the other day, pocket aces against pocket nines, lost a $2,000 pot. I mean, I'll take that play every day, but again, I got to be in the right spot. If you put yourself in a bad position to build, you got no shot. Okay. Options trading may sound risky or complex for beginning investors, so they often stay away. Well, again, they're probably the simplest market to trade of all, but of course, they're also the most misused, and they're the most what's the right word I'm looking for? The advertising on these is not good. Okay, I'm not a big fan of a lot of the mails that go out there. Okay, they're way too misleading and not enough truth that make you promises that can no way be met. Okay, any of you tells you you're going to return 90% of a lying piece of you know what. Some basic strategies using options, however, can be help a novice investor protect their downside and hedge market risk. Well, we use nothing but basic strategies. You know, I know every strategy. Well, I don't know everyone because I keep developing new ones, but there's millions and millions of strategies because you can make combinations. But simple is the best. It's the easiest. It's the most profitable. You know, when you're a retail trader, which we are, okay, we don't need complicated. We can't take advantage of complicated. Complicated is for somebody who's on the floor or now an electronic market maker who can grab the edge on one side and put together and lock in a profit by putting on the rest of that trade. We can't do that, so it doesn't really matter. Okay. Here we look for strategies. Now, again, none of these strategies by themselves I would trade. Okay, by themselves, I use them in combinations. I would use them because I want to make sure that on every trade, I am buying some premium and I'm selling some premium. Okay. And I want to use the time to my advantage. Okay. So how do I use time to my advantage? Anybody got a guess? I'm going to get there. I'm just curious. Anybody got a guess how you use time to your advantage? Sell what? You say sell it, calendar spread. Yeah, calendar spreads, double diagonals, weighted double diagonals, anything. And especially in today's world with weekly options, okay? We don't need to be complex. The complexity is for morons, okay? You can't get the edge. So why would you want to work on if you've ever heard of option for the Greeks? I don't give a crap about the Greeks. I don't use them ever, okay? I care about two things: the delta of the option that I'm using and how much time I got left. And I don't need to say theta and delta. I know what it's worth, right? Anyways, your mind, right? You know, in trading, your biggest enemy is you, yourself. Look in the mirror. That's the person that causes you the most grief. Okay. If not, ask your significant other, they'll tell you. It's a very interesting thing. But again, I've watched it. I've traded against it. I've seen it. You know, again, on the trading floor, you get to see a lot of things. And if you remember the movie Trading Places, all right, now the scene, the pricing might have been a little bit out of whack, but the actual scene itself was like a real busy day on the trading floor. Okay. And that panic and those shrills in the voice were real. Okay. I heard it a lot. In fact, we had an old saying on the trading floor: if you can see their tonsils, give whatever they want. Okay. They're wrong. Okay. So a trader's mind, right? We have fear, greed, and I believe that the market's rallying right now on greed. Okay. You know, I go back to this, I've said this a number of times over the last few months, but if I'd have told you 5 years ago I could give you 5.25 or 5.5% in the CD, you'd have kissed my ass and ran for it. Nobody wants now. It's not good enough. Everyone wants to be in the market. They're chasing it up, but hey, whatever. Hope, complacency, overconfidence, overtrading, regret, and despair happens to all of us. Now, it's how do you control those emotions? How do you put yourself in a position? Well, what you got to do is you got to put yourself in a proper strategy with risk management. Okay. You got to understand your risk right away. Okay. Because that's the big key here is always money, right? You heard me say this in the pregame. I'm saying it again. Life comes down to two things. One is always money. The other is up to you. Okay. But money is a part of everything. Okay. So if you manage your risk, it allows you to stay in the game. And believe me, trading is no different than the game of poker, gin, backgammon, or bridge. And if you play any of those games and you're good at them, you should be a good trader because they're all the same thing based on mathematical probabilities. Okay. So some of the strategies that you might look at, right? Well, first thing I got to share this with you. I got this morning from one of my members, one of my buddies. Okay. Just for transparency, I'm committed to creating a complete book of axioms of Bubbisms. You will learn and understand everything is now number 3. Okay. Now, you sent me the first 2 already, too. I forgot what they were, but I have them written down. But my point is that I teach, I don't publish. Okay. I don't want people taking what I know how to teach and what I understand. Okay. I give it out live, not in published in writing, until you can see it. Because again, for me, there's too many con men and women out there that are making ridiculous claims. And I know I'm using my strategies to get there. Okay. So thanks, brother. I appreciate it. Anyways, so trading derivatives and adjustments to defense is just as important as offense, right? So right now, we're trading a lot of calendar spreads. Right now, we're trading a lot of weighted double diagonal spreads. Okay. Why? Because right now, the conditions of the markets are simple. Volatility is light, it is low. And if you don't know how to understand volatility, okay, we look at the VIX index. Okay, you hear them talk about it on TV as the fear index. They don't know what they're talking about. It's not the fear index. The VIX index is simply derived from options being bought to open versus options being sold to open. When they're buying a lot more to open, that means volatility is rising. Okay, it just happens to usually coincide with a sell-off in the market because I write a report for Trade Your Brokerage, who, by the way, will be great for all of you who become members because it's $10 a month flat for commissions. But I every week, the number 1 and 2 strategy almost every week invariably are call buyers and put sellers. And why people sell puts? Because I think they can buy the stock cheaper. Okay, they're willing to buy the stock anyways. And that's why volatility continues to fall when the markets are going up, because people are selling options. So if you're prepared, okay, you can understand why you use different strategies at different times in the market, because there are times to be more aggressive, there are times to be passive. But the one thing you must do always is to establish the trade model you want to use and the risk. So calendar spreads are simply just taking here's a calendar we're putting on this morning. Okay. I gave this out this morning on the call. This is live. Nobody has it on yet. It's going to go on Monday. Okay. It's a calendar spread. It's actually a diagonal spread, which is like a calendar in coin. Okay. We're selling the weekly options for this Friday, the 28th of July. We're buying the August 18th, which is 4 weeks from now. Okay. And we are now know exactly what our risk is. Okay, our entire risk in this trade is potentially $1,032. That's the maximum I could possibly lose, but I can't lose that much. Okay, because what do I do know for 100% certainty is that on Friday, July 28th, the top 2 that I sold are going to expire. They're either going to expire worthless or worth something. But either way, I'm going to have the opportunity to roll them forward, buy those 2 back, and sell for August 4th. And I know right now that sale is going to be at about $5 or $6 as we sit here today. Okay. So I know that I'm taking my risk and cutting it in half in 1 week. Okay. Now we don't always get that, but this happened to be a particular setup. Okay. That we are going to take off half of our risk in 1 week. Okay. And still have an opportunity. And my intention with this trade is to change the dynamics of this trade, because I know another thing. I know a week from this week, earnings are coming out. And how do I know that? Well, yeah, I know because I looked it up, but I know by looking at the actual trade. Coin, Charlie Oscar, India, November. Okay, and if I look at the trade screen, okay, and I go look at here and I go, oh, here's the volatility. Okay, so the average volatility for this week, the 28th, is 82%, okay, which tells me that coin's going to move about 8%, okay, this week, plus or minus 8%. For next week, the volatility goes to 110%. So what does that tell you? Right off the top, what does that tell you? It should tell you that there's something going on, okay? We may not know what yet, but you'll learn how to find that too. But when you see a spike in volatility from 82 to 110 and then start to drop, that tells you that in this particular week, there's a specific event going to happen. Okay. And I happen to know that particular week is earnings. There it is, August 4th, August 3rd. Okay. But if maybe it's a drug announcement, maybe you got a drug company, maybe it's, again, it could be any list of things. Normally it is earnings. I think Netflix has earnings this week. Hold on. I didn't mean to jump that out. I think Netflix has earnings this week. Netflix. I think. I'm not sure. I don't remember, but or was it last week? Maybe I missed it. I missed it. Okay, there you go. Okay. But anyways, if you look forward, you will see a rise in volatility. Oh, here's squares coming out. Watch. So we can see by here. So the earnings are going to be in this week right here. 68 from 46 to 68. There's the pin. There's the date of earnings. And what's the date? Oh, August 3rd. How about that? And you can recognize it by looking at volatility and learning it. And by the way, volatility is the most important thing you're going to learn because it's going to help you put on the best strategy at the best time. So as we go back and look, so calendar spreads are straight. You buy a call and sell a call in the same strike. You're selling the near term, you're buying out in the future. And you can buy out as long as you want. Okay. If you're doing a short trade, you're selling a put in the near term, you're buying a put out in the future. Okay. And so now you're looking for the market to stay steady, collect the premium, and then continue to sell against it. Do you decide that you've made enough or whatever that you want to let it run and you want to play the short side? Okay. But again, you have to recognize, can you get paid off in the amount of time that you're going to put the trade on? So I know that every trade that I put on, I know that by just buying and selling premium every week, I'm going to make a profit. Now, again, that doesn't guarantee it's always going to be work that way, but that is the idea from when I put the trade on. Okay. Now, in other trades, when I use a weighted, what we call a weighted double diagonal, we're using the calendar. Okay. Here is the one that we're putting on in the diamonds. We are using the calendar, okay, to sell in the near term, but instead of buying one out in the future, we are buying two of each. Okay. So if I look at this position as it sits here is net neutral. Okay. So when I was on the trading floor, I would have never gotten called into the principal's office for having too big of a position, because this weights out to be neutral. But if it gets a big move one way or the other, if we make a big move down, does the business stay neutral? Does it get long or does it get short? What do you guys think? Anybody? Anybody got a guess? Long, okay, long. If it goes way down, you get short. If it goes straight down, because what happens is here. So if it goes straight down, your calls become worthless. Okay, your short call becomes worthless. Your long put or your short put starts to gather value, but so does your long put start getting value as well. So now you're long, you're net long. Okay, and the farther it goes down, the shorter you become. Okay. Well, I can't help that. Okay. That's why you need to come to the class, big boy. Okay. So these are the different types of trades, and we want to understand how we're going to roll them, right? We're not just buying calls or puts. That's for fools that just buy calls or puts. Okay. Again, it doesn't work. You can't make any real money doing it as a retail trader. You're giving up way too much of an edge. So what we have to do as ourselves is we have to bring the edge back to our side. We have to mathematically bring the favors back to us, the trader, not others. Okay. So we have to create these positions knowing that in this case, I'm selling an obligation to me that I might have to deliver the stock, but I'm buying the rights at the same time. So I'm at no risk. So again, I've established my absolute risk on this trade, which as I told you is 1032, but I know that that's impossible because for 4 weeks, I'm going to be able to sell premium and take off from that risk and hopefully turn that into a nice big profit. This trade has a risk of what? $452 plus the difference in the width of the spread. So this trade's got a $700 maximum risk, but it is either long or short. On this trade, I make money if it does nothing. I make money if it goes straight up, or I make money if it goes straight down. Okay, the only question is how much. That's what you're looking at here. Does it go long if it goes away? Yes. These trades will go with, they're designed to pick up speed with the market if it happens to break out. The perfect action on these trades is to first have nothing happen for a couple of weeks and then have them explode. Okay, you get your money out and then you get them go. But in the meantime, I know here, let's just do this real quick. Okay, I'm going to do this for you and show you. Here's coin. I actually just do diamonds. That's the easier one to do. Diamonds numbers aren't so daunting. Okay, so if I got a position on the diamonds right now, okay, let's say I have on I'm short to 348, 357. Okay, I'm gonna set this trade up first, and then I'll explain it to you. Okay, I gotta get all the legs set up first. More info I want. Where am I at here? Did they change their? There we go. Okay. There we go. Okay. So I got the 358 call, the 347 put, or 348. I'm sorry, 348, 357. I'm doing this live and in front of you. 357 and 348. Okay. So right now, okay, and I want to buy back the ones I'm short and sell for next week, knowing that I have overall protection out a month from now. Okay. So right now I can sell this and make this trade for $125 credit, $1.25. Okay. So if I go back to my risk, I got 452 risk at the moment. So now next week, if I get the $1.25, my risk goes down to 327. If I get $1.25 the next week, my risk goes down to 201. And by the time it's all done, the trade is paid for itself with a profit. Okay. And how does that work? Well, again, I know it's obvious some of this is a little bit confusing, but here are open trades right now. For example, we've got Ribbon open right now, which so far we've collected $80 out of a possible 421. Roku, which is earnings this week, we've collected 555 out of 1,500. And in Goldman Sachs, which had earnings this week, we've collected already 1,680. We've got well over $1,000 profit in this trade if we want to close it here. Or we can adjust it, stay in the market, and take a big portion of the profit out. Okay? Now, this is the actual results from last week. I showed these this morning. These are live. Okay. Apple, we had a trade. These expired. We closed them out. These are the profits. These are all based on one contract. Okay. This is still open, so there's no marker. Here is the rest of the trades that we had on. Okay. And that's how we did. Now, again, not every week's going to be like this, but this is the idea. Each and every week, I'm tracking how much we're collecting so that I know exactly what our exposure. So I know I can look here and say, okay, I know my risk is X right now. Okay. And that's what I want to make sure that we always know where our risk is and how we're getting out. Okay. How we're going to end the trade and where we can get out and make the best of it. Or if it turns into a bad situation, how do we make the best out of a bad situation? Okay. Now, what can you trade? Well, basically, there's options on equity options, which you're familiar with, and those are all standardized. Now, if you're going to trade outside the equity world, like going to the futures world, that's fine, but understand that equity options are standardized contracts. They're all based on 100 shares, okay? Except in the indexes like the SPX, which is based on a cash settlement, okay? But you can use them on ETFs. You can trade options just about anything. The one thing you must know is what? They must be liquid. Okay. That's the only thing that you have to worry about. You have to have liquidity. Okay. Now, the only other thing you want to know, now many people get worried about assignment and exercise. It's nothing to worry about, and I'll explain more of that in our class. But at the end of the day, the SPX and those indexes are traded on what they call European style, which means there is no early exercise. Okay. But on American style, you can exercise anytime you want. Okay. European only exercise at expiration. American exercise anytime you want. And there will be times when it becomes prudent to do so. Now, when you look at the overall distribution of options, we want to trade at the money. The money is made at the money. The at the money options, which are the 50 delta options, are the most liquid options. Okay. They're always at the money. So you always know, no matter what you're looking at, that the at the money option is going to be 50 deltas, whether you're looking at it for next week or next year. It's going to be right around 50. Okay. What does that mean? It means for every dollar move in the stock, that option is going to move 50 cents. Okay. Now there's other things that go into it, which we'll teach, but again, obviously as it goes up, the delta goes higher as well. But understand the distribution. When you're trading, it's always best to trade around the money. Too deep in the money, you give up the advantage of volatility. Too far out of the money, you got no shot. All you can do is get punished going way out of the money. Okay. Now, you will see something here that you will never see again from me in any of my classes, but I know many of you are familiar with them, and they're called risk graphs. Okay. But the trades we make cannot be put on a risk graph, number one. Number two, if you can't figure out the risk without a risk graph, maybe trading is not for you. Okay. Again, I'm not saying that you can't look at them, but the last time I looked at them was 1982. Okay. It was called the Schwarzer trend. Okay. So what trading should I use? What strategy should I use? You buy calls or puts? Yes. Sell calls or puts? Yes. Buy debit spreads? Not by themselves. Sell credit? Anytime. Okay. But really the key here is to understand that you want to create your own derivative trade so that you can give yourself the opportunity for unlimited profit, limited risk. Okay. Because what you're really trying to do is make sure that you have an exit on every trade. Okay. Whatever it happens to be. Now we'll change, every Saturday we have a call, and we will change strategies as the markets start to change. When they do, we will adjust. Okay. And we'll always be willing. And that's the key to learning. So even though I can teach Stoic and Standard, the markets aren't standard. So it's easier that I can teach you when it's happening instead of trying to get you prepared before it happens, because that's almost impossible. Okay. So we use all of these strategies, but in combination with each other to make sure that we're getting A, the highest return, B, the lowest risk, and the greatest opportunity. Okay. Now, never sell naked options. I know many of you do. And look, I could stand on my head forever and tell you that nobody wants to listen to me. I'm just telling you, selling naked options is a losing position. And whether you want to buy the stock or not, selling a naked put, look, there's a better way to create that same trade. Okay. Without having to expose yourself to $18,000 margin or $20,000 margin. Any trade you can make with that kind of margin, I can make it for less. Okay. And if you're paying margin interest, you'll get the deal that I'm doing you a favor. Okay. Plus, I'm saving you from the grief and aggravation of risk. Okay. Now, I'm a high school graduate. Okay. But I believe in education. Okay. I believe in learning something every day. And I try to teach something new every day. If you want real value, real education, and success, you got to take the time to learn this. If you're coming here just for freebies, you don't want to learn, hey, it's probably not for you. Okay. I teach. Okay. I have a passion to teach you, to make you better, to make you money. Okay. Listen, I could just trade myself. I chose to be a teacher. Okay. Because the trading life has been very good to me. It's been good to my family. My son's in the business now, and got killed in GMC selling naked. Well, I told you. Again, I hate to say I told you so. Okay. Don't let school get in the way of education. You're damn right. Okay. Look, my kids are educated. I didn't go. I chose to trade. I actually chose to get a job first. But again, I want to give you an education that'll pay much more than the college education ever paid you. Okay. If you take the time to learn it, if you take the time to study it, if you go with it, because self-education will make you a fortune. Okay. So if you want to join me on our journey, okay, and you want to take advantage of our program, okay, you can take advantage now. And what you get is a weekly training webinar every Saturday. Okay. You get daily updates every morning, at least once a day. I send an update. You have access to the chat room, with other traders in it. You get the Monday night strategy call as well. Every Monday night I do I don't know, an hour and a half or whatever on what's going on in the markets, all different markets. You will learn how to use options properly. And for the first 50 people, you can get $99 a month or $1,000 annually. And you can go to our partners, targettrading.co/options. And the choice will be there either for monthly or annual. Okay. I can only take 50 because it's education. I got to be able to educate you and I cannot get overwhelmed. But your future starts now. Okay. And for those of you who come today, okay, you can get the 2 books I've written. Okay. You can go buy them on Amazon instead if you want. I prefer that, but I'll give you the 2 PDF files. Okay. And of course, you get there's a 6-session option course I did for Trade Your Brokerage beginning, more for beginners. Okay. That you will get to listen to. But I also teach, so you're not really in a big funk there. But again, it's targettrading.co/options. Okay. Monday is at 4:30 Eastern, and it's recorded. Everything I do is recorded. I say nothing if it's not recorded. Okay. I'm a guy that wants to make sure that you have record so you can go back. I want you to learn it. I want you to be educated, because again, you'll have a lot of fun trading in the options world if you learn it, because there's a lot of things you can do. In fact, we were talking this morning of different ways on how to protect our profit in Goldman Sachs. Okay. And one of the choices was to just sell it and take the profit. And I go, no, we got too much time. Let's adjust and let's make sure we get at least the amount of money we get now, but also give an opportunity to get much more. Okay. So again, there is no promo code to my knowledge. I think you go to their page. If there's a problem here, any of you has a problem, okay, I'm only taking 50. Okay. Anybody who emails me if there's a problem, I will guarantee you, if I have to go over 50 because you had a problem, I will guarantee you a spot. But I'm only taking 50 today. I have to. It's hard work for me. And since I get up at 1:30 in the morning and go work out every day and work 7 days a week, I got to make sure I can get everybody educated properly. But if you have a problem, email me at bubba@bubbatrading.com, and I will send you a special link that I'll have done if you're having a problem. There is no promo code as far as I know. But again, nobody's going to get slighted if you want to be here. Okay. I want to educate you. I want you to be a part because your future starts now. All right. That's what I want. And if you have any questions about anything I said, anything about options, feel free to fire them up. I'm happy to answer. I got all day. Okay. Bubba's great. I joined the answers to my questions pretty quick. I'm pretty fast, aren't I? You're those who give the gift to those who invest in themselves. Thank you, Bubba. Hope to have well enough. I can't wait, Steve. Okay. Listen, I'm the quickest draw on the email gun. I usually it takes you, if it's longer than 10 minutes, there's a problem. I might be in a hole somewhere. Okay. But if you have any questions, I'll be happy to take them. Again, it's about you learning progress. It's about you learning why volatility does this. It's about you understanding how to take advantage of earnings season, because that's one of the things you can do. There's a lot of money to be made. And listen, there's going to be losses too. Again, I don't want anybody to come in thinking that tomorrow they're getting rich. Okay. I want you to understand where you are and what you're trying to accomplish and have goals set. And your goal should be to make 50 to 60% over the next year. Okay. Anything less would be a little bit of a disappointment. Anything more would be a bonus that I would not expect. Because again, we don't get the kind of movement and we can't take the kind of risk to make it more. Okay. But we can make regular and steady money, which we do just about every week. Targettrading.co does not, it's .co. Okay. .co. Let me just see what happened. Did I listen, if you know me, you know that I'm a shitty typist. Oh shit. I'm sorry. My bad. My fault. You're right. I am an idiot. I forgot. There it is. Forward says options. That's my fault. Which one? Which program are you talking about? There's different. I don't offer this. Okay. Directly. Okay. So again, it depends. That was old. What is the trading tool you are using? This is Thinkorswim, which I do not trade off of anymore, but I do teach off of it. Okay, because it has everything I need, and that's what I used to use. but I use Tradier Brokerage now, which is $10 a month flat. Think about that, right? Think about how much money you'll save on commissions. Okay. $10 a month flat. Okay. So again, any opinion on AI machines? I don't know. I think there's an issue, and you know, I can't say it. Okay. I like the algorithm part. I like parts of it, but I don't like the control it gives up. I don't know. I don't have a good answer. Maybe Monday I will. Would have saved me $650 so far this year. Yep. It saves me $100,000 a year. Do you teach basics? I do. I teach it all. Okay. But also that 6-session course that you'll get has got all the basics in it too. Okay. Again, I'm an educator. I don't look at the clock when I'm teaching. You know what I mean? I want you to be successful. That is my, if you're not successful, it's like when my kids, and they didn't win championships, you know, I'll never forget, my son was 8 years old. Okay. And he was in his first championship baseball game at 8. Okay. And he struck out to end the game. And he was sitting there with his little bat crying and I said, Xander, some kids will never get to the championship. I said, here you are, you're 8 years old. You got a whole lifetime. Little did you know, the first time he won when he was 10. And I said, what did I tell you? In the meantime, I coached him to 21 tournament wins. Okay. Over the years. Tradier Brokerage. I'll send you, if you want it, send me, any of you wants a link to Tradier Brokerage, send me an email, bub@bubbatrading.com. I'll send you their link. $10 a month flat, okay, for all options and equities. Send me an email, Ashwin, please. I have to have an email because I can't copy them of this, and I won't remember. Bubba, always fair and on top of the game. Thanks, man. Nice to see you. Okay. See, I don't share the chat with everybody because, you know, I don't want people talking in my language because you know me, I could get a little carried away. But again, it's really about your success. That's what I care about. Again, just Google Trader. Yeah, it's try.trader.com/Bubba. Okay. Just to make sure that you get everything you're entitled to. Okay. You know, it's actually, I could probably hold on 1 second here. Okay, but I'll answer any questions you got as well. But hold on 1 second, Remy. Here, I'll help you out here with this. Hold on. I'm so innovative. I'm so old school. It's ridiculous. Let's see here. What do I want here? I want this, and I'll bring this over here. Okay, and it's try.tradier.com/BUBBA. Make it big so you can see it. There you go. Try.tradier.com/Bubba. Okay. In the meantime, again, any questions, feel free to fire them. I got time. Like I said, I'm not going anywhere until you tell me to quit, then I quit. It's like when I did my stress test. 13 minutes on the treadmill. She says, are you done yet? I says, when you tell me to quit, I'll quit. I'll drop dead on this thing before I go. All right. Well, again, it's targettrading.co/options. I lost the feed signal. I will listen to the recording and an email. No problem. Come on. I teach futures too. I teach anything trading. Commodities, futures, options. I teach it all. I trade it all. I trade it all every day. Okay. I've got positions in about right now in about 60 markets right now, between equities and options and futures and commodities, and I got everything. You're good. Please lower the temperature. I like it hot, baby. I'm going out to the pool when I'm done here. Then I'm going to play poker. Then I'm going to go see Oppenheimer. Or is that what it is? Oppenheimer? And I'll be at the Suncoast later. All right. Well, I guess there's no questions again. TargetTrading.co. I can only take 50. I think I'm up to 44. Okay. I got room for 6 more people, and I have to leave a few for the recording when I send it out. So, but if you have an issue or a problem and you didn't get in, or there was just email me and I will take care of you. Okay. Again, I never shut anybody out. I really want to educate, but I also got to watch how I can get everybody set up. Number one, And number two, make sure that I can teach them most efficiently. Okay. As all, I thank you very much for your time. I appreciate it. And have a great weekend, everybody. Enjoy the Open. And if you're a golf fan, and I will see you all, those who join, I'll see you Monday night. Thanks, everybody. Have a great week.